Okay. Yes, Anka Metcalf is here. Anka did a great interview last time. I'm very grateful she accepted to return. So I'll just proceed. Anka, welcome back, and I'm going to make you the presenter. Look forward to speaking with you again. Welcome back to F.A.C.E. Look at that chart.
Oopsie, I don't know which chart I'm sharing right now.
You have the S&Ps.
Oh, I have the S&P here. Can I switch to a different screen?
Sure.
Let me see.
It'll give you that option of which screen you want to show.
Okay, and by the good morning, Dale, and good morning, everyone. It's nice to be back.
Oh, thanks so much, Anka. I'm so glad that you decided to return. Last time we were talking, what a different environment. Do you remember when it was? How long ago?
I remember. I think it was like more than a year ago, I believe.
Okay.
Yes,
Right,
and we were definitely in a very bullish market environment. It was a pullback buy scenario pretty much in all the indices.
Right,
So,
buy the dip, buy the dip, buy the dip, and now sell the rip, sell the rip, sell the rip. So it's been pretty treacherous. I do recall last time you said you had no problem trading either side of the market, long or short. So
no,
how have you been handling the treacherous nature of this? Because before the last couple of weeks, it was real whippy. You'd have huge up days, failing spikes, and then the support would hold, and then another big rally. So I found it a difficult environment. How about you?
I think that any trader that has been trading this market for a very long time has found this market extremely difficult. And it is funny that you mention it, because there are a lot of posts and a lot of things that are out there, and I'm receiving a lot of emails that this volatility, you can make a killing in this volatility. I think it's the other way around. I see this volatility as being very dangerous, and here's one of the reasons why. You do get the follow through, and this volatility works for us in terms of follow through, but at the same time, as a very active day trader, I find it very hard to take part in any of these big moves that are occurring because of the risk. The stop loss levels are huge for any kind of day trader. I mean, I'm a day trader that likes to trade more of a median time frame, and I like to focus more on the 5-minute chart, 15-minute chart. Yes, so for that specific time frame, I find it very, very hard to actually place multiple trades within a trading session because of the risk level. So if you look at any setup that is occurring in the Dow, and I'm speaking about futures indices, in the Dow, in the mini S&P, or even in NASDAQ or Russell, the ranges have been extremely, extremely wide. And if you do not consider these wide ranges, you very easily get kicked out of the trade before even having a chance for that follow through to happen. So this has been an extremely challenging period, not only for myself, but I think that for all the traders that are market participants in this market. And we have to be very, very careful, because the market snaps up or snaps to the downside in a fraction of a time. I run a trading room, and when I'm in the trading room, oftentimes, I'm looking at charts. We do pre-planning for trades, and oftentimes I see a setup, and by the time I utter the entry, the trade is long gone. So the trade is already down. Let's say if we're in a short, it's already down like 15, 20 points, even 30 points. So I find it extremely, extremely difficult. I think that for any kind of time frame that you look at, and I think one of the reasons is probably, the algos that are pushing. And one of the things that I've seen in the market is that when you're having the setup form on any kind of time frame, you're going to see sort of like the slingshot effect. And what is the slingshot effect? It is basically if you're looking to get long and you really define your support level, you know that you're going to give it a little bit of wiggle room so you don't get taken out by the algos or, by any kind of trail stop or anything of that sort. You're going to see the price push in before releasing more to the upside. Oftentimes I see this happen. So the support resistance levels that are developing on smaller time frames are very, very delicate, and you really have to have very, very deep pockets. And I don't think that this is a market for small account holders because they can literally get whipped out. And I find it a very, very challenging market environment.
Well, you know what would really clarify it? Okay, a year ago, you're day trading S&Ps on a 5 and a 15-minute chart. What was your average stop loss back then?
Back then, it was around 2 to 3 points max.
Okay, so that's a blink in the eye. So now what? Now what is it?
5 to 7.
It's what? 5 to 7?
Yes, 5 to 7. 5 to 7 points, not ticks, but points.
Right.
Yes.
Right. So it's doubled.
It has doubled.
Doubled your risk. So that says it all. So even on a short-term time frame where you could really kind of be precise or more precise, and you're not looking for as much when you're right, you've had to double the risk. So do you tell your people, since you have double the risk, to cut their leverage in half?
Absolutely. The risk is reduced to half. We have reduced the risk. I think it was in September. We have started reducing the risk exposure, and actually the market has been wiggly since September, so it has been a quite difficult and challenging market environment. And at the time, when this volatility actually has increased, I was actually engaged in some swing trades, and at that moment in time, I remember we were one of the last swing trades, and I haven't done any swing trades since then, active swing trades, like to hold them for let's say 1 or 2 days or even more. But when I take swing trades, I often look at the 4-hour chart. So reliable, right? Higher time frame. It's sort of like the median between the daily charts and the 60-minute chart. And setups that occur on the 4-hour chart are somewhat reliable, very reliable, especially if you're in an ongoing trend. But right now, the market is so difficult, it is actually not worse. It's in between, because if you look at, this is a discussion maybe for later about the trend and everything. But back then I took a setup and I had a stop for a swing trade that was about a 60 or a 70 point stop in the Dow, which is pretty okay for a swing trade and for a 4-hour chart formation. And that failed. I oftentimes use intelligent stops. What are intelligent stops? Basically, they're soft stops, so you don't have a hard stop in place. And
it's a mental stop?
Yes, exactly. It is a mental stop. So you let the index or commodity or stock or whatever you're trading, you're letting it move lower. But obviously, when you initiate the trade, you initiate the trade with definitely less risk exposure, so you're minimizing your risk for the trade. So let's say you get in with half of your position or a quarter of your position, based on that 4-hour rotation, you're assuming, obviously you're trading with a trend and you're assuming a continuation higher. But if it violates the support level, and if you have the price breaching the prior support level where your current stop should have been, you're going to let the price pivot before you place in the other stop, and then you add on the other half of your position, and so you're basically averaging down. But that specific pivot that forms, that becomes your hard stop. Okay. So no questions. So it's not like you're adding.
Yeah. So it's so you end up with a hard stop, because
exactly.
I do know people that trade without stops, but they're very very disciplined traders, and they, they know they're wrong, and they're just looking for a better out than the stop, or maybe they'll give it 5 minutes to see if it was a stop hunt. But it really takes a lot of discipline to use a mental stop. In fact, I have a joke that the last time I used a mental stop, my first stop was a mental institution. Anyway, you're scaling in because it's very hard to be perfect in this environment. So you're piecing in on a couple and then putting in your stop. So if the S&Ps have become more difficult because of the extreme ranges and how fast they're trading, have you gravitated towards any other instruments that have had less volatility? For example, currencies have had less volatility. They've been very quiet in comparison to stock indexes. Are you trading other instruments besides stock indexes during this time frame? And what's working for you?
I am actually super focused on the indices, gold and oil, and this is pretty much my trading universe.
Okay.
Sometimes when there are more or less swing trading opportunities, I gravitate towards copper and natural gas. And actually this morning I was looking at natural gas that it is trying to hook on the daily, on the 50 moving average. So it's trying to do a constructive rotation off of that level.
Yeah, that's a beast. That can be a beast at times too, can't it, Natty?
Exactly. So you have to be extremely fast, and definitely I use hard stops when I'm trading copper and when I'm trading natural gas. I'm not stubborn. I'm very flexible in that point as to the directional buy, so I don't have any problem switching between longs and shorts. And I also trade stocks. I have had a couple of swing trades for December. Actually, I think I had like 3 swing trades the whole month of December. I haven't had many. I am trailing extremely tight because in this very fast-paced market environment, we need to be extremely disciplined and take profits immediately. It's not because we are not in a trending market right now. And I know that a lot of traders are saying, yes, we are definitely trading in a downtrend market.
Yeah.
Yes, but the thing is that the market has had so many issues is because we did not have a downtrend confirmation on higher time frames. It only just happened yesterday after the Fed meeting that the market literally ripped to the downside and has violated, in most cases, the February 5th lows, and is now trading well below. So now we can talk about a serious downtrend onto smaller time frames. But then again, we're looking for, let's say, a shift of regime right now into the weekly charts and onto the monthly charts as well. So I think that the turbulence came from the fact that we did have the asymmetric environment. Higher time frames were still dictating higher, and that's why we were having such strong currents to the upside, and traders were still buying the dips at certain critical levels. But again, we had the avalanche of the smaller time frames, so the 4-hour charts, the 1-hour charts were dictating lower, and that's the conflict, and that's basically one of the reasons why we had this volatility and this chop in the market. And let's face it, this is a really choppy market environment, and I think it's probably here to stay. And unless we definitely, and I think that yesterday was the first test. I think the market just needs to digest these new lows to identify itself and see, okay, so where are we going from here? And I think that it is pretty obvious that, it held for such a long period of time. There was such a tug of war, especially on the weekly charts. It was a zigzag, and it was sort of like a Christmas tree effect. If you are using candlesticks, it was green, red, and huge weekly swings. I mean, incredible swings. And now that we finally literally just cut the cord and we broke lower, I think that now the price needs to define whether it really wants to push lower or it wants to rotate from here. But I think that we may have one leg lower. And I think that it's often very, very difficult to trade after an FOMC meeting. And especially I think this week is extremely difficult because tomorrow we have option expiration, another doozy for the books.
And, yeah, triple witch.
Exactly.
Quadruple.
And it's not your ordinary, exactly. It's not your ordinary option expiration. We have the quadruple witching option expiration, and it is going to be a very, very very difficult time for the price to establish and to show its true value. And now
we also have the winter solstice tomorrow, and sometimes there are shifts sometimes in markets on the change of seasons. I'm interested in what I'm seeing on your setup. What kind of moving averages are you using? On most of them, you have 3. On the crude, you have 4. But how do you use these moving averages? Do you look for crosses, pullbacks to them? It's really the only indicator on your chart, so I'm assuming they're important to you.
Absolutely. I do use volume as well. I'm going to pull up a chart with the volume, and this is basically I'm watching for price action, and I'm watching definitely for entries after I do my pre-market game plan. So basically, I'm a multi-time frame trader, so I like to trade in perfect synchronicity with all my charts. But the moving averages that I'm using are the blue one is the 20. Simple moving average, the green 50 simple moving average, the red is the 200 simple moving average, and I'm also using the 10 exponential moving average. I use the moving averages. Yeah, I use the moving averages because I see that there's a lot of pressure that is basically present at or around these moving averages.
They're like magnets. They're like magnets.
Exactly. Okay. They are, and they are alternate support resistance areas, and especially after let's say pretty much a crash that we had yesterday, and on minor time frames, it pretty much looks like a crash. And where you see the price that is getting very, very extended from these moving averages, you can pretty much expect a counter. And you could probably see, you would actually see the price pull into the moving averages before the next release. I tend to focus more onto the 20 simple moving average when I'm trading minor time frames, when I'm trading my 5 or the 15-minute charts. And then you could see it very well work here. So this is another pressure point with the doji into the 20 simple moving average, and this is basically a really good short. So it's a really, really viable short here on the 1 hour that came in and triggered. So what I'm looking for is I'm looking for information as to where the pullback is going to be headed, and especially into this market where the price is releasing to the upside or releasing to the downside in such a violent mode, and then you're having the quick turnaround and then release back again. And I think it's a great gauge to use these moving averages. I don't use any other sophisticated indicators, and I think that it is very important to pretty much watch how the price is reacting. You mentioned the crosses. One of the things that I have mentioned, and throughout the years I have noticed, especially day trading for such a long time, I've been day trading for more than 16 years now. One thing that I find very intriguing and very interesting is that if the price is basically meandering in between moving averages, so let's say here we're going to get that rotation on the 1 hour, and if the price is going to hook above, so if this 20 SMA is literally going to try to push, once the price gets above the 20 SMA, and if the 20 SMA is going to try to push the price, I find that there is going to be a very choppy environment as the price is going to be in between moving averages, and that's
how about like this example you're giving right now, that there's confluence between the green moving average and a pivot point? So that kind of give
Exactly.
you that give you a little bit more conviction about the trade when you see a couple of those
Absolutely.
coming together.
Absolutely. And I think there are a lot of things that are happening here on this 1 hour time frame. I think this is going to be a big decision point, and this is going to be a big selling pressure point because this 23.5, let's say 590 here. Not only that, we have this confluence from the pivot point with the 50 SMA, but we also have minor resistance deriving from this prior pivot low. So this is a strong selling point right here. So if, let's say, there should be a rotation into this area, I'm using these confluence zones to establish my resistance. My resistance and definitely my target areas for the possible rotation higher. These are the most difficult patterns right now because after an accelerated move down, you have pretty much the double, let's say double top, not quite. You have the lower high here, but sort of like the double top effect into the 450 also kind of psychological if you think about it. You know, those 50 points, a whole number of points are also prone to buying pressure or selling pressure. But we had the doji, we had the rotation here. Now, one of the problems that we're going to encounter here is the fact that are we going to have the follow through? Because as we're getting closer to the New York trading session, we really, and I think that the London session doesn't really know what exactly, you know, how the New York trading session is going to handle price. So you can see that right now we're trading below the 10 EMA, but it's not really into a sell dynamics because it had a grind up. And oftentimes when we have the grind up, we pretty much come in a little bit, pretty much into a 25 to less than 50% retracement from the pivot low to the pivot high, and we rotate at this point and rip to the upside. So again, I oftentimes see this happen, but nonetheless, as long as we have this doji selling pressure here, what I look for, because obviously I'm not trading the 1 hour chart, but I'm looking for clues on the 1 hour chart. So I'm looking for a sell into the 320, and then I quickly navigate to the 5 minutes so I can have a better risk level. So 320 is right here. This is basically the trigger point at the 320. And now instead of using that high point stop, I'm using a 5 minute stop right here. So this is how I'm transferring all my information from higher time frames to smaller time frames because I'm looking for inflection points for points that can trigger on higher time frames that can offer the price, the velocity of continuation, and then I'm looking to obviously use a minimum risk. So instead of using 420, I'm using 350, which is only which from 320, it's only a 30-point stop here into the Dow. Okay. And I'm looking obviously for a continuation lower, but if you're only looking at the specific time frame, and I found this over the years very challenging. I know there are traders that are only, you know, like what you see here on the chart is basically what you get. So you're only focused on these particular time frames, but I think it's so important to focus more on everything else. So I'm going to show you a quick example here, just of my home screen. I'm going to drag it here. So as you can see here, I'm also looking at all the time frames. So 1 minute, 2 minute, 5 minute, 15 minute, 1 hour, daily, weekly, and monthly. So I get when I start my analysis, I always look at the daily and the weekly every single day, even though at the open, I focus more on the 1 minute. So I have strategies that are based off very small time frames in the first 30 minutes of the day. So in the first 30 minutes, I watch the 1 minute and the 2 minute. I think that it's very important not to have pretty much, you know, a focused vision on only the time frame that you're trading, but analyze it, take a step back, you know, and analyze the chart. And
so it gives you your biases looking at long term. Okay, so you come in with a bias based on macro charts, long-term charts, and trading short-term. Okay.
Yes, because I'm looking for follow-through, so I'm not necessarily looking for a scalp move, but I'm looking at the bigger picture because I want to let's say, chunk more of my profits into the zone. And
Okay.
yeah, and moving from that 1 hour, because I just mentioned, the doji into the 20 SMA. So definitely 320 was one of the entries. So this is pretty much where the trade has triggered. You immediately place the stop here, and definitely you're entering a very active trail mode. But as you can see, there are different formations that are happening. This is another formation right here. So this is another sell point. So if you're trading the 5-minute chart, this is a more accurate, I would say a more accurate chart, but it support resistance levels on a little bit a higher time frame are not as fragile as the 1 minute or the 2 minute or even the tick chart. So
Right.
they offer you
Less noise.
Exactly, and time, and you're basically buying more time. You are going to be in the trade for a longer period of time. You're not going to be shaken out as often. And by the way, you also have when you get the buys from a higher time frame chart, you know that, okay, so I have that rotation that is happening at that key location. There's a lot of selling pressure coming in, so you have your bias well established. So you know that you are going to look for what? You're going to look for a pullback sell. Again, this is another setup here that has developed into the 267 for the short and 290 for the stop. And you can pretty much look to the left-hand side of the chart for possible target zones into the next support areas.
Okay, Anka, for people that be interested in learning more about you and what you do, why don't you tell us about your business model, perhaps show your website?
Yeah, okay.
It's commercial time.
Commercial time. Yeah, I wasn't ready for it.
Okay.
I didn't know we were going to have a commercial break.
Yeah. Well,
Okay.
you could talk about what you do. Obviously you have a trading room.
Yes,
And
I do have a trading room. Yes. So
okay, go
what
ahead.
I do, yes, we teach traders how to day trade and swing trade the equities and the futures market. We have 2 big classes that we have offered for the last, I would say, 7 years. These are the trading education classes. We have swing trading for stocks and ETFs, and we have futures day trading, and we also have added, and we will have added the futures swing trading class. And definitely you can visit our website for more information on that. I also run a trading room. The trading room is open from 9 o'clock until 4 o'clock Eastern. I mainly specialize in trading the New York trading session open. It is a really good time to make money, and things are very active, a lot of volatility, and a lot of continuation patterns may be present into the New York trading session. So that's my favorite time to trade. We also have a full portfolio for all our trades that are posted live. Not only that, they're posted live with a timestamp into the trading room. I'm constantly on the mic. I call the trade, whether long or short, exact parameters for the entry, the stop, targets before the trade is even initiated. All my trades, by the way, I'm using limit orders for my trades, so it's nothing impulse, not buy here, sell here, nothing at market. So everything is really well pre-planned ahead of the trade development. We also have an auto trading program. What that means is that we're trading your money. So if you don't have the time to spend in front of the markets, auto trading may be something that a lot of traders may look into. Maybe they have.
What do you use? Do you use a trade copier, or you have MAM or PAM set up?
No, we basically take all the trades that are called in the trading room. We trade our clients' accounts. And we have a form here. If anyone is interested, they can fill out the form. We have full transparent track record for 2017 and 2018, including commissions and monthly fees. and everything, and all our clients receive receive the broker statement at the end of the day. Everything is extremely transparent. So this is something for the trader that does not have the time to spend in front of the markets, or a trader that doesn't necessarily know how to trade and how to take advantage of certain moves that are occurring in the market.
So let me understand this. You trade other people's accounts. They can choose their broker, or you have a recommended broker?
We have a recommended broker.
Are you an IB?
No.
Okay, so you have a recommended broker. Do they have to sign power of attorney to let you trade their accounts?
Well, no, they don't. But if they're interested, they can find more information here. They can fill out the blank. Yeah, it's quite a bigger discussion here with the setup and everything. Yes, but basically what they do is they wire the funds. Basically, there are a lot of papers that are involved and a lot of agreement that are involved. And we have actually a representative that is actually in charge of everything and all the documentation and all the paperwork and all the requirements and everything else.
Okay, Anka.
So I'm handling the trading business, and my business partner for the auto trading program is handling the other side.
It's called compliance.
Yes, absolutely.
Okay. So Anka, Merry Christmas to you. Happy New Year. Wish you a prosperous 2019. Thanks for dropping in here today, and appreciate you sharing your methodology, and hope that you have a great holiday season and a bumper crop in 2019.
Thank you so much, Dale. I wish the same to you and yours, and I hope that all your longs go higher and your shorts lower. And that is for everyone. And thank you so much, Dale.
That's why I wear suspenders. All right. All right.
Thanks so much, Dale.
All right. Great to laugh with you.
Everyone.
All right. Have a Merry Christmas, Anka.
Thank you. Merry Christmas.
All right, everyone. That's a wrap for us. See you tomorrow for TGIF. Remember, don't just count your pips, count your blessings. See everyone tomorrow to wrap up the week. Adios.